Hello and welcome to this October 26, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are taking a look at Genpact Limited, ticker symbol G. This is about a $3.6 billion market cap company on the New York Stock Exchange. You can take a look and see this is only about a 4-month chart here. But what I really wanted to feature is during the period when the market's been really strong, the end of August through just recently, you can see that Genpact actually made a huge run, ran up from a little over $13 to getting close to $19, better than 40% run up. But at the top, as it was putting in this high up here, you can see that the MACD had started to roll over. So the entire move to the upside, you can see the MACD turned and was going up with this move. But on the most recent high, right up here in the middle of October, you can see that the MACD had made a decidedly lower high on the MACD when prices were moving up. And again, those negative divergences just simply tell you that momentum is slowing, and it creates a lot more risk in owning a stock on the long side, or worse yet, buying a stock. Normally we want to make sure that we've got momentum on our side. We don't want to see momentum slowing. Also in mid-October, you can see that Genpact had been overbought on the RSI for over a month. And anytime a stock or an index remains overbought for this extended period of time, it's not good health. It's not good technically for the health of the stock. And as a result, many times what you'll see is when a stock finally does start to sell off, especially after a negative divergence, sometimes that movement can be pretty quick to the downside. And you can see that was exactly the case here with Genpact. The last 6 days, we've gone from almost $19 back down to about 16. Well, the low on Monday was 16.08. Notice the 50-day came in at 16.17, so we went below the 50-day intraday, but we did manage to come back up and close above it on better than average volume. Now, when we see negative divergence, this is what we look for. We look for a pullback to the 50-day moving average. In our view, this resets the MACD. So getting back down to the 50-day moving average, having the MACD coming back down close to the center line, now I think Genpact is in a little bit better position to go in the direction that it really wants to go. The momentum that we saw that was slowing as of a little more than a week ago, that to me has now played out here to the downside, and now we just need to see whether or not Genpact can hold on to critical moving average support here at the 50-day. You've also got the 200-day just below. I'm not a huge fan of the 200-day, but when it's that close to the 50-day, it should provide some additional support as well. So this is an area that I'd really look for Genpact to hold to the downside. And if you're looking for entry or have been watching the stock, these are the types of entry points that I like, because after you've seen a big move down like this, we were up, like I said, 18.70, came down to what, 16.08, so that's about $2.70. It's pulled back about 15% off the high in just 6 trading days. So I think that now that some of the air has come out of the balloon, so to speak, I do think that this represents a much better reward to risk entry point on the long side on Genpact. I would keep a fairly tight stop. You get a close much below the 50, certainly below the 200-day, and if volume's increasing, I wouldn't take any big chances. But short of that, I would expect to see G reverse back to the upside. First key resistance area is going to be up around the 20-day. If we can get through that, then you're going to have gap resistance up around 1775. And if Genpact can climb above that gap resistance, the only thing left really is the high back about a little more than a week ago, up about the 1875 area. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.